In the world of investing, what if I told you that a minority group was quietly, consistently outperforming the majority, and by a really huge margin? Well, today, we're going to unpack a fascinating paradox, and I have a feeling the numbers behind it are going to challenge a lot of what we think we know.
Just take a look at this. This comes from some really interesting research by the CFA Institute and Axis Mutual Fund. It shows that women investors in India, despite being the minority, are investing more, holding on longer, and building way bigger portfolios. This one statistic, right here, is the core of our entire explainer today. How is it possible that a group participating less is actually achieving so much more?
It really makes you wonder, doesn't it? If these are the results women are getting, why is there such a huge participation gap in the first place? And what is the secret sauce? What are they doing so differently that allows them to build so much more wealth? Let's break it all down.
Okay, let's dive right into the hard numbers. We're going to look at 3 key data points that, when you put them all together, paint this really powerful picture of a fundamentally different and honestly more successful way of investing.
So, the first piece of this puzzle is pretty fascinating. It's not that women just have more money to throw around. It's that when they decide to invest, they commit 25% more capital per person. That points to a strategy of making, more substantial, more focused investments right from the get-go.
And next up, we've got the power of patience. Women hold on to their investments 22% longer over a 5-year period. This persistence, as they call it, is an absolute game changer. It means they're not panic selling when the market gets a little shaky. Instead, they're riding out the volatility. And that gives their investments the critical time they need to compound and really grow.
And here it is. This is where it all comes together. You take that larger initial investment, you add that longer holding period, and what do you get? A final portfolio, a corpus that is a massive 37% larger on average. That's the bottom line right there. It's the tangible proof of a winning strategy.
So we've seen the what, these incredible results, but that of course brings us to the much bigger question, why? What's actually happening behind the scenes here? Well, behavioral science gives us some really compelling clues about a totally different approach to investing.
Yeah, research points to some really clear behavioral differences. So on one hand, the approach more common among male investors can sometimes be marked by overconfidence. And this can lead to, trading too often and maybe not diversifying enough, putting all their eggs in one basket. But on the other hand, the approach we see more commonly with female investors is built on patience, a real long-term focus, and a greater willingness to actually seek out financial advice.
And what's the one financial engine that's powered by patience and discipline? Compounding. It's that magical force where your money starts making its own money. Seriously, the traits we just talked about, patience, focusing on the long term, avoiding those frequent ego-driven trades, they are practically the best friends of compounding.
And all of this brings us right back to that central puzzle. If all the data shows that women have this behavioral edge when it comes to investing, why on earth are there so few of them in the market? What is stopping them from just getting started?
The reality is, we are still looking at a market where only 1 out of every 5 investors is a woman. Now, there is some good news here. Women, especially those under 35, are actually the fastest growing group of new investors. But a huge structural gap clearly still exists.
So what are these barriers? Well, for one thing, the gender pay gap means there's often just less disposable income to invest in the first place. Then you've got societal norms, which have traditionally put big financial decisions in the hands of men, and that can create a confidence gap. And on top of all that, you have historical gaps in access to financial education. It's a whole set of significant hurdles that have absolutely nothing to do with ability.
So, after all of this, what is the big takeaway? Ultimately, this isn't just a story about gender. It's a really powerful lesson in which specific behaviors actually build long-term wealth. And that's true no matter who you are.
For all the men watching this, the takeaway here is incredibly valuable. Seriously, this data isn't a criticism, it's a roadmap. By consciously choosing to adopt behaviors we're seeing here, like trading less, focusing on the long term, setting the ego aside, you could potentially see much, much better returns.
And for the women watching, this data should be so empowering. It's basically saying your natural tendencies for discipline and for long-term planning are a massive advantage in the world of investing. The biggest barrier isn't your ability at all. It's just about getting past those initial hurdles and starting the journey.
And that leaves every single one of us with one final critical question to think about. Let's just forget gender for a moment and look at our own habits. Ask yourself,
Are my actions helping my money grow through patience and compounding, or are they sabotaging it with frequent trading and overconfidence? The answer to that question could literally define your entire financial future.